Hello, everybody, and welcome to the next installment of the Butte County Library Reach Financial Wellness series. And today we're going to be talking about managing payroll for your small business. And so I just want to kind of disclaimer in the beginning that this is going to be pretty tailored to small businesses, right? If you're like a larger business, let's say you have, $100 million a year in annual revenue and you have 300 employees that work for you, probably there's going to be some better options than what I'm going to talk about. This is really mostly designed around getting small businesses off the ground. If you're just brand new, getting going, you got your first couple employees and you're trying to figure out what to do, that's what this is going to be geared towards. If you're a larger business, you have an HR department, you're going to have a little bit more complex than what I'm going to talk about here. So the way my background in this area is I used to consult for startup companies in Chico. And so I used to help get them kind of off the ground and get going. And I worked with some of the programs downtown, like Chico Start. I used to have a space at Chico Start, and I used to work with small businesses to help them get going. And so one of the things I would do is help them get their payroll going. I'd get set up with the IRS and the state so that they can pay their employees, withhold the right amount from their paychecks, make sure the money gets where it's supposed to go, make sure all the forms get filed correctly. That was just one of the things that I did. And so I'm going to kind of talk about what I used to do. And another disclaimer here is I used to do this prior to 2020. And in 2020, they kind of changed a lot of the withholding rules. But I'm still a little bit up to speed on how that goes. So we'll talk about it. And then that's really it. So it's changed a little bit, but I'll kind of show you how I did it and some of the thoughts that you might want to look at in how it might work for your business. So before we get started here, let's go. There we go. So this is a series for Butte County Library's REACH program, and the REACH program is a program put on through Butte County Library, and we do weekly, actually my series is weekly on Fridays, but we have a bunch of programs that go every week, multiple days a week on all kinds of financial literacy and economic empowerment. And you can go to the Butte County Library's website and see the REACH program's calendar of events and see all the different things that are available to you that you can use. Let's get this pulled up here. There we go. And so if you go to the Butte County Library's website, you can see the REACH program. You can see all the different topics that are going to be coming up here soon. So I highly recommend checking it out and seeing some of the cool things that we got going on. So with that out of the way, let's say you're a new business and you just hired your first employees and you're wondering, what do I do now? I hired somebody, I offered them a job, and now I need to figure out what I'm going to do. Or maybe you're thinking about getting your first employees and you're not really sure, what the process is to make sure you do it the right way, right? You don't want to bring on a new employee and then all of a sudden realize there's a lot more costs involved than you thought there were, and you can't actually afford them. And so now let's say, okay, we're going to do that. So first things you need to know is if you're going to be paying them, which I hope you are, if they're an employee of yours, you're going to be paying them, you need to withhold state and federal taxes from their pay, right? Assuming that they're subject to those. Some people would not be subject to those, and depending on the kind of employer and employees, there are some scenarios, but let's just pretend you're a for-profit business. They get paid a decent amount. It could be minimum wage, or it could be a little bit more, but they work enough that they make enough of a living that they can live off of it. And so we'll just assume that they're going to be paying state and federal taxes. And so there's also Social Security and Medicare withholding. And so everyone who works for a wage in the United States is supposed to be paying into the Social Security. Well, most of the people are supposed to be paying into Social Security and Medicare. And so those are social services that exist for our country. And then there's a little bit of money that gets taken out for those in addition to federal and state taxes. Some localities have local taxes, and I don't know all of the different localities that have local taxes, but this is a series designed for Butte County where that's not going to be a factor. So I want to get, like, if I had to guess, I would say probably San Francisco has some sort of local tax, but Butte County, like Chico and Oroville, Orland, all these areas in Butte County don't have a local tax that we have to worry about, but some places do. But because I'm designing this presentation to be for Butte County, we'll just we'll skip the local tax piece. And then so when you pay your employees, you're going to send them, or sorry, you're going to pay them, you're going to withdraw or withhold some money from what you pay them, and then send that to the respective place that it needs to go. So if it's Social Security and Medicare, those are federal programs, and you'll send that to the IRS along with the federal withholding. And for state, we have the state of California, and you're going to have withholding for state taxes, which we'll show you in a little bit how you do that. We have the EDD, which is our employment department for the state of California, and you can pretty much do everything online through theirs. IRS can be done online too, but they also have forms and you can mail things in. And I always found it, I mean, I'm a kind of a weird person, but I always found it easier for me to do everything by hand and mail it in. But I can see why it would not be convenient for most people to do that. It's just, I like to write things out and see it, and then I can scan it and keep copies on my end. And it's just easier for me than filing online. But for depending on the person, I can see why, you know, one way or the other would be easier for you. Okay, so now that I'm saying, okay, I need to withhold, I got Social Security, I got Medicare to consider, okay, good. What are some of the important forms that I need to know about? So to start off, when you very first hire an employee, we're gonna have a W-4 and an I-9. And a W-4 says how much should be withheld from this employee's wages for income taxes. And so if a person, let's say they're a single person, they make a pretty high wage, they make a lot of money, they don't have any dependents, they don't have any kids, they don't have a lot of deductions or a lot of credits or anything like that on their taxes, they're likely to pay a pretty high income tax. And so you would withhold more from those people than say somebody who's married with dependents and has just lots of different credits for all kinds of different things. And then they might have less withholding because they're going to be taxed less. Maybe somebody who's low income might not even be subject to income tax if they make so little, right? If you, as employees, when we file our income tax usually in April for most Americans, but you can file it sooner than that. And so when we go file that every year, you know, prior to April 15th, we have a standard deduction. And so if we make income less than our standard deduction, we don't have to pay income tax at all, right? And if we know that we're going to make less than the whatever our standard deduction is, depending on if we're single or married, or, you know, depending on our filing status, we'll have different standard deductions. But if we know we're going to make less than that for the year, then there's not really a need to have withholdings because you know you're going to get it all back. And so they have tax tables for low income individuals to do the math for them differently than somebody who makes more money. So the employer is going to have to file a 941. Usually, almost always it'll be a 941, although it could be a 944 for some businesses if they're really small businesses. And I wanted to include that on here because the IRS might direct you to file a 944 instead of a 941 if you're a very small business. But a 941 is going to be the form for most businesses, and you'll file that quarterly. Every quarter, you'll file a 941 with the IRS, and that will tell them, here's how much I paid my employees in wages. Here's how much I withheld for Social Security and Medicare, and a few other ones, which would be like if you had like a FMLA leave, or if you had like sick time or something like that, you could have some withholdings for those, because those still, if you pay an employee because they have paid leave, that would still be taxable. So those kinds of things would get withheld. And then you kind of total it all up. And there's some adjustments that you can do. There's different kinds of things that you can have for. There's like a fractional cent adjustment, which is basically nothing. It may be a couple cents a year or something, not a huge deal. There's like a research adjustment. There's a few other adjustments that you would include in the 941 form. And then at the end, you'd say, okay, here's how much I owe to send to the IRS, which includes all of my employees' withholdings, all of the Social Security and Medicare, and then we kind of break it out by employee. And then for the state of California, the same things are true, but you don't necessarily have to know about the form numbers. You can just do the filing online on the state of California's employer's website. And what you do on there is you break it out by employee. And so when I did it for my, it could have changed in the last 2 years, I'm not 100% sure, but when I did it for my clients, when I was doing consulting, I would put in there each of their employees, we'd have their Social Security number for the employees, and then how much they made, how much was withheld, and then we can just pay online directly through, you know, just like you'd buy something online using a credit card, you do the same thing, you just use your account, your bank account, your business bank account, you'd pay it all right there. And so it's Somewhat, it can be straightforward. I think the biggest concern here for most employers is like the forms are kind of long, and if you're not comfortable with tax language or accounting or any of the money stuff, which a lot of new employers aren't comfortable with that. A lot of new employers are really excited about their particular business, right? They're an entrepreneur, they're really excited about their business and about their solution to whatever problem they're solving, and they don't really want to deal with the numbers, right? And if you watch any episode of Shark Tank, you'll see somebody come up who's really passionate about their thing but doesn't really know the numbers for their business, and that's a big struggle for a lot of entrepreneurs. And so I just kind of want to reiterate and drive home, like, you got to be on top of this even if you don't want to. And I know it's a slog for a lot of people, but that's just part of it, and that's just what it goes into being an entrepreneur and running a business. Is you got to deal with some of the nuance of finance and accounting and payroll and tax and all that stuff. And so anyway, those are the most important things. So let's kind of go one at a time here. I actually have a couple things pulled up. So the W-4 form, so you can kind of see what it looks like. W-4 is for employees to fill out to say how much to withhold. And then later I'll show you we have a form here to figure out how much to withhold from their income using the W-4 form. So you can see down here, you use the W-4 form, which was updated for 2020, or after 2020 it was updated. This is the 2022 form. But after 2020, it was updated to a new W-4. It used to be a different, like a little bit, I think it was smaller and a little easier. I think payroll used to be a lot easier back before 2020. But this form they fill out, you use the numbers on here where they say, here's how much to withhold. Some employees may want extra withholding, and so they might put in here like, hey, take out an additional $500. That might be a lot, or it might be a little depending on the employee. Take out an additional $500 from my paychecks for extra payroll tax withholding, because I know I'm going to owe the IRS a ton of money at the end of the year. So take it out now so I don't have to deal with that. And that could be, a scenario depending on the employee. Some employees have multiple jobs, right? And some employees, maybe their spouse also works, and so they file jointly. And so one employee makes a ton of money and the other employee makes very little, and you don't want that kind of differential to have an effect on their withholding and how much tax they owe. And so one of the spouses may choose to have a lot extra withheld while the other spouse chooses not to. There's a bunch of reasons why one of your employees might choose something over another. But every employee who you hire needs to fill out a W-4, and they need to fill it out, and you just follow the instructions. You kind of have to, read through what it says to do, but you do one of the following, and you can use an estimator, and you can, try to be as accurate as possible. And I think it makes it harder if you have spouses who work multiple jobs. But there's, you can fill that out, and you can go, there's specific instructions down here you can use. Fill out this form to say, okay, well, I have multiple jobs. I have 3 jobs, or I have 2 jobs. And you say, okay, here's how I do it. Here's how my deductions are going to work. You have the standard deduction depending on the type of filing that you have, right? And so I would just say, go through and fill it out, go through in order and do the instructions, and just go whatever it tells you to go. And then you can go down here and you can see, okay, well, how much do I make and how much deductions should I have? And you can fill out the form that way. So have your employee, each employee does this. This is not for the employer to file. This is for the employee. So if you have 3 employees, you should have 3 W-4s, one from each of them, and you should keep them on file, and you need them on hand in order to figure out how much to withhold from their paychecks. And so depending on the kind of pay that you offer to your employees, let's say you pay them monthly. Like I work for Chico State, and so Chico State pays monthly to the faculty. So we get paid once a month. But students who work at Chico State get paid. Actually, I think they might get paid once a month too. But a lot of places, it's common for a lot of places to get paid bi-weekly. You get paid every 2 weeks. Some places pay, in completely different pay periods, right? There's some places that just pay you annually, which I think is kind of odd, but I guess it could work for some people. Some places pay semi-monthly, which is different than bi-weekly. Semi-monthly would be you get paid twice a month, no matter how many weeks are in the month, and semi-monthly is you get paid twice a month. Bi-weekly is you get paid every 2 weeks. And so sometimes you might get 3 paychecks in 1 month. Sometimes you might get 2, that kind of thing. The other form that all your employees really need to fill out, even though I know a lot of people kind of skip this one and some people get in a lot of trouble for skipping this one, is an I-9. So the I-9 form is to make sure that someone is eligible to work in the United States. And so to make sure that you don't hire somebody who is not allowed to be working because maybe they're on like a student visa, so they're not supposed to be working or something, then you want to do this I-9 form. And so the I-9 form is really straightforward. You just fill in all the blanks. And then at the bottom, somewhere down here, there's a list of, so the list of identifiable documentation helps prove that someone is eligible to work. So maybe your employee has a passport. That's it. If they have a passport, you just say, perfect, I got the passport. Here's the ID number on the passport. Good to go. No big deal. Or you can get 2 items. So list A is 1 item. List B and C combined is 2 items. So you say, okay, well, I have a driver's license and a social security card. And so those 2 combined are good to go. Maybe your employee doesn't have a driver's license. Maybe they just have a state ID. That counts as well. So a state ID with some, like a birth certificate, I guess that could be. There's a lot of different things. A U.S. citizen ID card. You maybe have Native American tribal documents. I'm not familiar with all of these different documents. Whenever I've done this as an employee, I just have a passport. I have a valid passport, and I just say, here's my passport, here's the ID number, done. I don't have to worry about these other things. But most people, I think, unless you travel internationally, you might not have a passport. And so if they don't have a passport, a driver's license and a social security card will work. But make sure the social security card says or doesn't say not valid, right? Something like that. A school ID with a photograph is acceptable if they also have a social security card or something like that. There's a lot of different things. So you can go down this list and see, but it's either one thing from A or one thing from B and C combined, right? So either one of those is fine. So all of your employees need to have the W-4 and the I-9. And that will allow you as the employer to know, okay, I can hire them because the I-9 is valid and they're able to work in the United States and they can be employed. And the W-4 says, here's how much I'm going to withhold from their pay so that I can send it to the state and to the IRS appropriately. So we go back here, we say, okay, good to go. We got those. Now, as the employer, I need to file quarterly. Let's say my employees work, I keep track of their wages. How do I keep track of that? So before we get into the 941 form, let's say, how does the actual logistics of me tracking employee clocking in, clocking out, doing that kind of stuff? So depending on the kind of business you have, you may have employees who are on a set schedule. They work 9 to 5 every day, Monday through Friday, no big deal. It's just a traditional kind of salaried job. And if that's the case, then you might not really care to track their clocking in and clocking out. As long as they get their job done, you don't necessarily care if they got there at 9:15 or 9:30, whatever. Some employers don't care. Some employers do. And let's say, if you're a retail location, it really matters that your employees are physically at the store when you open, because if you can't open and your customers can't come in, you're not selling, right? So there's just different kinds of businesses that have different kind of logistics. And so one of the things that I did for some of my clients is help them set something up where, there's a lot of services that will do payroll for you, and there's clock in, clock out systems, and you can hire them. And there's actually, I'm in Chico, and there's a couple local businesses in Chico that do this. And I don't want to plug, 1 or 2 and then forget somebody else. So I won't name any, but I'm 100% certain you can Google how to do payroll and find some local businesses that do payroll, and they're great. And so that would be one easy solution. But if you're a brand new company and you have maybe 2 employees, then it might be too expensive of a solution. I don't know, you might want to check, but it might be too expensive of a solution for you to do for just 2 employees. And so one example that I did is for my clients, when I was doing this as a consulting work, is I just said, well, let's do a Google form. And then we'd have, I made this a little bit generic, just to, let's do this real quick, just so that you can see what this would look like kind of in general. But for one of my clients that was a social media company, they had, I think at most they had 12 employees at one time. And so we just had all of their employees. So I'm employee 1, I'm going to clock in, and then each employee was given a security code so that, employee 2 couldn't fake that they're employee 1 because they had to have the correct code. And so 1, 2, 3, 4 might work. You hit submit. And then what happens is it comes to this Google Sheet here where I can now see, okay, employee 1 and employee 2 can clock in and clock out. It gives a timestamp of when they did it. So then now I can use that timestamp to calculate how long they were clocked in for. And as long as they have their correct security code. So I just did this as an example. I said employee 1 has a 1234 security code. Employee 2 has a 9876 security code. They clocked in, they clocked out. And if employee 2 is trying to cover for employee 1 and trying to clock in as them and they don't put in the right code, I mean, if your employees share their passwords with each other, that's, I mean, that's going to be a problem, but I don't know what you can do to stop that. Is just have a policy against that and, you know, reprimand an employee for breaking policy. But I mean, that's kind of where this hits a roadblock a little bit. But let's say you want your employees to be able to clock in, clock out. They can do that. I have the timestamp here. And so now what I did on mine is we kept track of hours and we kept track of wages. So for June of 2022, I would set this up, you know, for every month of the year and then keep track of each month. But for June of 2022, I would have, okay, employees. So if I go back here and look real quick, employee 1 clocked in and out on the 23rd and they clocked in at noon, they clocked out. This is in military time. So this would be 1600 is 4 p.m. So they were clocked in for 4 hours ish, just about 4 hours on June 23rd. And I go down here and I say, okay, well, June 23rd, they were clocked in for 4 hours. And then employee number 2 was clocked in on June 23rd from 10 a.m. to 4 p.m. And so I can go over here and I can see they were clocked in for 6 hours. And this is employee 1 in this column, employee 2 in this column. And the way I set this up is I used some ifs. And so what I did is I said, you know, in Excel, if you're familiar with Excel, you can do formulas and you do some ifs. And what I did is I said, add up all the times where employee 1 selected clock out or clock in. I started with clock out because that'll be the bigger number. And so I say, add up all the clock outs and the time of the clock outs, and then subtract all of the clock ins and the time of the clock ins and for each employee. So for this column, it's only where it's employee 1. Let's get rid of this and I'll show you. So this would be for employee 1 would be for a time calculator C2. And so if we see on here, time calculator C2 up here somewhere, there is C2. So for C2, that would be for employee 1. And then for B3, which would be here, which would be for this date, June 1st. And so I said, okay, so for June 1st and employee 1, add them all up where it's a clock out and then subtract everywhere where it's a clock in. And then I did that, right? And so if you are familiar with Excel, you can, and this is Google Sheets, but it's the same thing. You can use the sum ifs formula to do that. So I just added them all up. Not really complicated. I mean, it looks really long. And then the way that Google Sheets deals with time codes is they will do like decimals of hours. So it'll be like 1.1. And so all I did was I multiplied the final number by 24 to give me the total number of hours, right? So so now I have 4 hours and 6 hours, and then the next day I have 1 hour and 7 hours, and the next day I just have employee 2 clocked in for 6 hours. And then on the wages side, I just take however many hours that employee was clocked in, and then over here I keep track of the hourly wage. And so employee 1 makes $15 an hour, and employee 2 makes $17 an hour. And so all I did was I multiplied that number, so they weren't clocked in at all. Let's go down here. On June 23rd, employee 1 was clocked in for 4.02 hours, and times $15 an hour is $60.25. Employee 2 was clocked in longer and makes more, so they got paid $102 that day. Total wages for the whole day was $162, the next day $134, and the next day $102. And of course, as this sheet, so let's go back here and I'll show you this real quick. So employee 1 clocks in 1, 2, 3, 4, hit submit. We go back here and then we see, oh, maybe did it go in? Employee 1, clock in on, we need to refresh this real quick. Say employee 2 clocks out 9876, hit submit, good, there it goes, okay. So that's where it was. So good to go on those. So those clock in, clock out. I can just copy this formula down. All this does is keeps track of the date of what day they clocked in. It drops the hours on it just so I can reference dates later. So now I have some information there, but that throws this off, right? So now all of a sudden, if you ever see numbers on here where these are, thousands and thousands of dollars or millions of dollars. It's because somebody's currently clocked in or clocked out. And so you can see right here, I have employee 1 clocked in, employee 2 clocked out, but that means employee 1 is still clocked in. And if I change this to employee 1, let's say somebody just checked the wrong box, and then this is 1, 2, 3, 4. Perfect. So now they're clocked in and out. So now there's nobody currently clocked in and my numbers get fixed, right? So that's just something to keep track of. And this is the way that I used to do it. And now this is automated. So once it's set up one time, now this is just good to go. So anytime any employee ever clocks in or clocks out using this time code, this list will automatically update. This data will automatically update, and I just create a new one each month for each, next month in July of 2022, I'll just update this to July, and then all of these numbers down here. And so you can see on here, these numbers reference how much they get paid. Down here, I just do a double check to make sure that these two total pay matches these two total pay. And then I say, okay, well, how much Social Security, how much Medicare needs to be withheld? And then we'll do a table in a second here to show how much to withhold for federal and state. And maybe you want to withhold or you want to have other benefits for your employees. Maybe you have a retirement account. Maybe you have life insurance policy. Maybe you have some other benefits for your employees. You can include those as well and just kind of make this a little bit bigger of a table. So that's kind of how I set that up. And then Form 941, which is the federal level, I have kind of set up here just as an example. I did the exact same thing for my clients where we just kind of outlined the 941, but let's go look at it real quick. So I'm going to go back to the PowerPoint real quick and say, okay, so now I'm keeping track of now that I am keeping track of my employees clocking in, clocking out. If they don't clock in or out, then you don't have to do any of that, right? You just say, I'm going to pay them this much on a salary, and then I divide that by months and say, okay, here's how much they're getting paid every month, or here's how much they're getting paid every 2 weeks, but it's just on a salary, so it never changes. Then your paperwork's going to be a lot easier because you can just copy it every time, right? It's the exact same number every time, assuming, maybe somebody didn't take like an unpaid leave or something, or there's, I don't know, if you have bonuses or something like that, that's going to add a little bit of complexity. But for the most part, every pay period is going to be the same. So, okay, so now we have the 941 to file. Now the 941 and the 944 are the federal forms for your pay withholding. The 941 is true for almost every business. If the IRS tells you specifically, they'll send you a letter, they'll say, hey, you need to file the 944 form, they'll tell you. And if they do tell you, then you file the 944. If they don't tell you, then you do the 941, right? You'll know to do the 944 only if you're specifically told. Otherwise, do the 941. That's it. It's pretty straightforward, right? That's all you have to worry about. And so the 941 form, let me go find it over here. 941 is quarterly federal taxes. And so that's for an employer to file. Employees don't deal with this. The employer has to keep track of how much they're paying their employees, how much they're withholding for all the different things, and then sending that money to the IRS. If I scroll down to the bottom here, this 941V is a voucher, and that's how much you're paying. And so you say, okay, for the first quarter, I'm paying this much, however many dollars I'm paying, and 32 cents. And then you fill in, all the information about your business, cut this off, send it in the letter. And so what I would do when I was doing this for my business, my own business, which had employees, and some of the clients that I had who they were businesses with employees, I would just do it by hand and then scan these and keep copies of them on hand just in case. And then I could always reference those. I could send those to my clients too. I'd say, here's the 941 form that I filed. I sent it in the mail. And so now we have, that letter is off. I can get a return receipt if I needed to, that kind of thing. But we just file the 941 and keep track of it. And so what you do for the 941, and the way that I set up this sheet here is to keep track of the lines. So line 1 is how many employees you have. And so by using this system, I can see I have 2 employees and for this month. And so I say, okay, cool, there's 2 employees. And then that's the first question they ask on the 941 form is, how many employees do you have? What is the total wages? And so on the Excel sheet, I can say total wages for line 2. And this is for each quarter, right? So for quarter 2, which would be June, I have $398 in total wages. And as I update these numbers down here, or as somebody clocks in and out, let's go ahead and change one of these. Let's make this like $500 somebody got paid. And we can see that this number gets messed up. So I can't just go in and change a number. This red indicates that I've changed something that shouldn't have been changed. And that's because I just randomly gave someone $500 without them having worked. But that's shorter than having them clock in and out for an amount of time. And so now that 500 goes in there, and now you can see this number got bigger, right? This automatically updates. for that $500 change. I'm going to go ahead and undo that just to make my examples work again. And so this tells me the total wages I paid for quarter 2. I haven't gotten to quarter 3 or quarter 4 yet, so these are still zeros. But once my employees start working during quarter 3 and quarter 4, these numbers will automatically update, assuming that they clocked in and out. One of the biggest issues that I had for one of my clients who hired a lot of part-time student employees, and they're great. I mean, but they're not always the most responsible, right? If you have maybe a high school senior who's working for you, they might forget to clock in or they might forget to clock out, and then you got to figure out, okay, what time did they actually leave? And you can go adjust that. So that's one of the benefits here is, so employee 2 calls me and says, hey, I forgot to clock out. I can go in there and change, and then so they finally clocked out at 19:02, but really they left at 18:02. I can go change that. And then all of these numbers update too, right? So now on that date, they get paid a little bit less because they clocked out. Now we changed it to that they clocked out at the correct time. And that's fine. And if you've ever dealt with employees, sometimes they make mistakes, and that's just part of being an employer, and no harm, no foul. You just gotta make sure it gets updated. But that was one of the biggest issues with some employees is just, forgetting to clock in and out and making sure you update it as needed. And so we fixed all that. So we fixed all the payroll stuff, and now these numbers automatically update. And so some of the things that you need to do is to how much total federal taxes withheld. We didn't get to that point yet, but over here, I'll withhold for state and federal. And how do I know how much to withhold for state and federal? Which is how much they're going to ask me on line 3 of my 941. How much did you withhold for state and federal? Well, I'm going to use this form up here that says how much income tax to withhold, and I'm going to use the W4 to figure that out. And so what happens is they have some tables down here. There's a couple different methods that you can use, but if you go through this, this is the percentage method. So you say, okay, how frequently do I pay? And this is the hard part for me to do as a presentation because so many businesses are going to have different methods, right? Maybe you pay monthly, and so you get paid 12 times a year, or you get paid bi-weekly. So generally you get paid about 26 times a year. And so you have to fill out this form here. And I mean, you just go, it's instructions. So you just go one at a time. And I know it's a little bit overwhelming because, well, one, that's small text. And so that's kind of a pain, but also it's just, it's a lot of instructions and you just got to go one at a time. But once you have this set up and you've done it once, it gets way easier. The second time you do it, you breeze through it because you're like, okay, cool. I know what's going on. So if the employee has submitted a W-4 for 2020 or later, which should be all of your employees, then you just do these lines, right? And you get your adjusted annual wage. And then down here, you got to find the table that matches. So this is the percentage table. And if they're married, filing jointly, or they're single or filing separately. So depending on which they are. And then if their adjusted amount is at least, let's say they get paid about $100,000 a year, and they're married filing jointly. So if their pay is at least $96,550, but it's less than $191, that would be the case for somebody who's making $100,000 a year and is married filing jointly. Then the amount to withhold would be $99,615 plus 22% of the $96,550 because they're going to be in that 22% tax bracket. But that would be for the full year, right? And so depending on the frequency, so this would be a standard schedule. And then you can do percentages of that, a fraction of that, depending on how frequently you're paying them, right? So you have this table 5 here. If I scroll back up to the original sheet, it's actually table 3 for the percentage method, where you say, okay, I'm going to pay them, let's say biweekly. We'll stick with the biweekly example. You're going to pay them every 2 weeks. So you'd be 1/26th of their total withholding would happen during that time period. So that's how much to withhold. So depending on here, what I did when I was doing this prior to 2020 is I would just have the table over here and I would say, okay, based on how much they get paid for the year, I'd do an estimate. I'd say, yeah, they probably would get about this much for the year. Then I would have in here, federal withholding would be, let's say $50 gets withheld there for that one paycheck, and state withholding, $25 gets withheld for that single paycheck. I actually can't, so that's more than they get paid. So let's lower that a little bit. Let's say like $30.15. There we go. Okay, so now their net paycheck for employee 1, they get paid $24. Of course, that's a little bit absurd because somebody working and getting paid $24 is like almost not worth it. But this is just an example where this employee only worked 2 days total for the whole month. And only for a few hours. So, okay, fine. So they get paid. There's some withholding here. This 941 then updates for taxes with federal taxes withheld $30. I go back over here and I see, yep, $30 was federal taxes withheld. So all I did here was sum up everything in this row, right? So I have, and I want to include, let's say I had some withheld, let's say $20 withheld from employee 2. So now combined, that's 50 total withheld. And so this number updates to 50 as well, right? And so what quarter are we in? The yellow box for me, I have a kind of a system that I use where anytime I highlight something in yellow, that tells me that it's an input that I need to change. So if I'm going to file my 941 for quarter 1, I can change that to a 1, and then all these numbers update to 0 because I didn't have any employees in quarter 1, right? If I go quarter 2 or quarter 3, I can update those as well. But I'm in quarter 2. So I have $50 withheld in quarter 2. And then here's my total wages. And then the tax percentages. So for Social Security and for Medicare, you can see Medicare down there, you have to withhold from the employee's pay and you have to pay on your own. And so these are the total amounts for the withheld from the employee and combined from you as an employer, or sorry, those are the percentages. This is the total amount of money that would get sent over. And so part of this would come from you and half of it would have been withheld from the employee's pay. And then so all combined, so you can see here, this is just added all up. So line 5E on the 941, I go to 5E and I can see the total, add them all up, right? And so the way that I outlined this is so that I can just go plug this number in. So 5839 goes to 5E. So I go to my 941 form, I go to 5E and I type in 58, and then I think it was 39 if I remember correctly, 5839. And then I can go back here and I say 5839, perfect. And then all of these just go straight down the line. And so you can do this for yourself relatively easily. You can just start plugging in some numbers. It actually keeps going quite a bit. And so you can, keep going and then fill in the parts that you need and just follow the instructions. And then you sign it, you'd send this in. You'd have a preparer if somebody prepared it for you, or you can do it for yourself. And then you would fill it all out, send it in, and then along with a payment. And so you can pay online. You can do that through the IRS website, or you can send in, I always just sent in a physical check because it was easier for us to keep track, because then in our accounting software, I would keep track of the check number, what it was for, when we sent it in, when it was cashed, and I would be able to keep track. And if we were ever audited or we ever had any kind of issues with the IRS, I would have a really great track record and paper record to be able to say, here's exactly every step that I took and proof of where it came from. And then, maybe, I don't know why, but maybe there's some sort of audit where they say, wait a minute, I think you are overpaying or underpaying people for some reason or another. I can show them, here's where everyone clocked in and out, and here's my proof that they clocked in and out at those times. And one of the cool things about Google Sheets is I can see the history of edits. And so if I ever want, I created this file as an example, but on the real one for actual clients, I would have a history of every change I ever made. And so that's perfect for auditing purposes, right? If someone comes in and says, hey, I think somebody's, screwing me out of some money here, I can say, well, here's every single change. And so we go back through and we say, oh, you know what? Somebody came in and changed the employee's clock out time to a different time. Is there a reason for that? Maybe not. And a good thing, one of the things I always did is I always had a notes section too. And so I usually put notes on everything. And you can either do a notes column, or you can do insert comment. If I can find insert comment somewhere over here, comment, and I can put in here, edited as per employee mistake, right? And I can put in whatever I wanted, like employee 2 forgot to clock out. Right. And then I said, okay, perfect. There's my comment. So now I can see that, oh, hey, I edited this. So maybe my client or the CEO or whoever of the company comes and says, hey, we paid, employee number 2 way more than normal. Are we sure that that's correct? And then I say, well, let's go look at what happened. I see, oh, there was an edit here and I edited that. Okay, let's go back. We look at the edits. We see, okay, here's the edit I made. Here's the comment I put on it. And we have a great track record there. And it's really easy to go back and see exactly what happened. And then we have a conversation. We say, okay, hey, that employee forgot to clock out or forgot to clock in. We changed that number. And then they told me to change it to whatever time that they clocked in or out at. And then maybe we need to say, you know what, maybe they told us the wrong time, or maybe they actually did work a lot more that day than normal or something like that. And so I can do that to basically anything. I put notes on everything when I do these for clients. But now that we have all that information, 941 can get filled in really easy. So that's the 941 form. I'll show you the 944. This is what it looks like, and this is to do annually. So the 941 is done every quarter. Let's go look up here real quick. So report for the quarter. So this, I would check the box for April, May, and June because we're in quarter 2. I'd fill in my EIN number. I need to have an employee ID, and so I would get that by I think it was with the IRS. Yeah, you call in with the IRS and you can get an EIN number. And that was really easy to do. I just filed it. I think actually I did it online and they gave it to me like either immediately or I just had to wait a couple of days to get it in the mail. It was pretty easy. And then you fill in some of your business information and that kind of thing. And so we got that going. If we do the 944 form, remember, we're only going to do that form if the IRS specifically tells us, hey, you need to file the 944 and not the 941. And they'll send it to you in writing. Look, it actually even says who files 944. You file the 944 instead of 941, only if the IRS notified you in writing. It says it right there. It's at the very top. It's in bold. It's pretty hard to miss. So you say, okay, cool. So this is for annual. So there's no quarterly going on with the 944, but it's all the same information. So you just do the full year all at once, all good to go. You can see how they break it down into every month. No big deal. I think it's actually a little bit more difficult to keep track of everything for the full year and then put it all in all at once. It's just kind of a pain. Doing everything quarterly just makes it a little easier to just, always keep on top of it and you have all of your records. But at the end of the year, when you go to do your entire year's books and you go to, check and make sure everything is in line with where it needs to be, you have all 4 of your 941s for the year for each quarter, assuming that you operated for the full year. And then you put all those together and you can just total them all up and say, okay, for quarter 1, we paid this much in wages. For quarter 2, we paid this much. For 3 and 4, we paid this much. We add them all up. Here's the total wages for the full year. And then we go back and we look at our bank statements. We go look at our credit card statements, depending on what's going on. And we go match all of those numbers. And we make sure everything lines up perfect. And then when we file our annual income tax for the business, depending on the kind of business you are, it's going to be either, if it's an LLC, you might have flow through to your personal. If it's a C Corp, it'll have its own taxes. If it's an S Corp, you might have a K1. It just depends on the kind of business you have. You'll have different kinds of filings. But once you get all that done, you have this 941 for each quarter, and it's really easy to just add them up and throw those numbers into your annual report. So that's the federal side, right? That's basically everything you need to know for the federal side. For the state of California, it's largely the same, just slight tweaks because it's California. So California does the same idea with withholding, right? And they have some examples on here. So this is the withholding schedules for 2022, which is essentially hasn't changed really. But California is going to tax, generally is going to have, well, I guess it depends on where you are, but you're gonna have taxes taken out for the state of California, depending on the frequency. It's all the exact same thing. You just kind of follow. They have tables for everything. So I said earlier that there's a low income. Let me see if I can find it real quick. Low income exemption table. So if somebody's low income, then there's a different table that you could use here. But if I scroll down a bit, you can see, okay, so if they're paid annually, if they're paid daily, let me see if I can find the bi-weekly one somewhere. Semi-monthly, we gotta find this there. Bi-weekly, there we go. So the bi-weekly payroll, if they get paid, so bi-weekly, meaning every 2 weeks, they're paid between $1,800 and $2,300, then you're gonna pay 8.8% of the amount over 1862. So however much more than 1862 they got paid, you take 8.8% of that plus $70, which would have been the tax for every dollar below that 1862 number, right? And that's a little bit complicated. I think a lot of people don't understand the progressive tax system and how we do it. But the more you get paid, the higher your tax rate. And so you can see for California, it starts at 1.1% for people who make very little and goes up to 14.6% for people who make a lot. And I know $38,000 on here. You're like, that's not a lot. $38,000 isn't a lot of money. What are you talking about? Well, this is biweekly. If you were getting paid $38,000 every 2 weeks, that's high income. I don't care who you are. That's high income. And so $38,000 every 2 weeks is going to put you in that top tax bracket. So you'll be withholding 14.6% of the amount above $38,000, plus you're going to be withholding $4,500 every 2 weeks from their pay, right? So if you're paying $4,500 every 2 weeks, that's $9,000 a month in taxes. You're in the high income bracket. That's just where you are. So you would do the exact same thing. And the way that I had it set up when I was doing this for clients is I would copy and paste this table, and I would just have it set up over here where I would say, or no, sorry, I'd have it set up over here where I'd say state tax table, And I would say if all of I would, if I were you and you were a business owner, I would try to have all of your employees on the same pay schedule, right? Everyone is biweekly or everyone is monthly. Nobody's on some special schedule, because that just makes things really confusing. It's so easy to mess something up if you have a bunch of unique scenarios. The more standardized you have everything, where everyone's on the same thing, the easier it is, right? If you're ever going to offer benefits to your employees, I know a lot of employees are going to want to come in and try to negotiate benefits and stuff, but if you have a lot of unique scenarios, it's really easy to mess things up. And so part of me says, you know what, as an employee, I applaud, you know, when people come in and say, hey, I'm you know, I want this benefit, or I want, you know, more or less of this or whatever. And I get that, but it can be hard sometimes. If it's something as simple as like how many sick days a year they get, that's way easier to do, because you can keep track of like sick pool, and then just add one to it every time, or however much, like however you do it, right? You can keep track of a sick pool fairly easily. But if it's something more than like the amount of sick and leave that they get, or something more than their hourly rate, which those things are unique to everybody anyway, those are easy. But if they say, hey, I want to get paid monthly instead of biweekly, that's just going to make your life a lot harder as the employer. And sometimes you just have to say, listen, I can't do that. And that's really all there is to it. So, but I would set up here, I'd go for both the state and federal. I'd say, okay, well, it's over 0, but less than 358. I go, okay, over 0, less than 358. And then I would go through and I'd fill out the entire table just like that. And then I would have a lookup. And so what I would do for state withholding is I would say equals index, return the amount plus the extra, and you do the exact same thing. It's going to take me way too long for this video if I try to show you how to build all that, but basically you just put in the same list and you'd say plus whatever's in this column, and then the percentage of whatever's in this column based on their pay. And that's fairly easy to do in a Excel sheet. It just takes a few minutes. And if you're not very comfortable with an Excel sheet like this, there are 2 solutions I have for people who don't want to go this method, and I completely understand the people who don't want to go with this method. The 2 solutions I have is, one is you can hire payroll people, and there's a lot of them. There's online services that'll do it. I used to use an accounting software. I used to a couple different accounting softwares depending on my client. One is QuickBooks, right, which is really well known. That's probably the most well known of the major accounting softwares that you could use. Another one that I used was called Wave, and I've never heard of anyone else using them, but I Googled like what's the cheapest accounting software when I first started my business, and Wave was free to use as a double entry accounting software, but they made their money by charging for the payroll services. And so I didn't use their payroll services. I used the Excel file right here. But if I wanted to pay for their payroll services, I believe they took a percentage of the payroll. And I think it's probably priced in a way where like it makes sense. It's just that when I first started my business, I was cheap. I was miserly. I did not want to part with a single penny if I didn't have to. And I would probably change a lot of things about the way that I run business now. But when I was getting started, I was 23 years old. I didn't know what I was doing. So I was, just barely getting things going. And so if you don't want to go through this complex way, you can hire somebody to build this Excel sheet for you. You show them this video and they'll know exactly what I'm doing. It's pretty straightforward. Or you can pay a payroll service to do it for you. And there's a bunch of different ways to do it. And depending on the size of your business, I'm trying to make this video as broadly appropriate for every kind of business there could be. But if your business is a lot more complex, that it might be easier just to hire somebody to do it for you. Or if your business is pretty straightforward, you might just set up a system like this and then just have, this is for June, but you would just set up a page for each month and then you could just add it all up and be good to go, depending on how you want to do it. So that's basically it. The other thing that I wanted to show you was the EDD, which is Employment Development Department, which is the state of California. And they're the people who keep track of, let me see if I can get to the home screen for EDD. So the EDD is the people who keep track of like unemployment claims. And then for employers, you do the payroll. There's job stuff. There's all kinds of things EDD covers. And I'm sure you've heard of them because you live in California. They're a major program for the state. So if you go to the employer section on here, you first would need to create, so you'd have an employer login. I'm not going to log in. I have an employer login with EDD, but I'm not going to log in because I don't want to have that recorded and showed to everybody. But when you do log in, you can see how much you pay for your taxes and what forms you need to do. Reporting for having employees. So you would register your employees as and have them do the W-4, and you I can't remember if EDD requires proof of the I-9, but the IRS could ask about it. This is actually customs and immigration, or citizenship and immigration. And so they're going to keep track of that kind of thing. But for the most part, you can keep all the records on there. And so what we would do each month, I think it was each month, definitely quarterly though, for the state, we would fill in payroll for each of our employees. We'd have it allocated by their social security number, and then we would keep track of all that. And the state website was really convenient for keeping track of it for the whole quarter after having each of those employees inputted. And then at the year end, they would just sum up all the quarters, and it was super easy to do. And we just had to make sure that all the numbers matched and we were good to go. And we would just double check our bank account and make sure everything kind of matched. And as long as there was no like numbers that just didn't line up, we were good to go. So that's the basic idea. How do I pay my employees is the other piece on here. So if I'm going to be paying my employees, I can pay them by physical check. That's totally fine. A lot of people still do that, especially for small businesses. When I was in high school, I used to work at a dry cleaners, and my boss at the dry cleaners would this is kind of when things were not nearly as, I mean, I'm not that old, but things were not nearly as technology focused as they are now. And so he would come in every 2 weeks and go sit at the back table, and he'd have one of those giant business checkbooks, where it's like a sheet of checks, and he would go through and do everybody's payroll. And at the end of the day, he'd come over and hand everybody their checks, and we'd say, cool, thank you, and we'd be done. And that's one way to do it. And that's probably the easy, I don't know, it's easy. It's an easy way to do it. It's, you can keep track of it because you have records of all the checks you paid, and you know the check number and everything, and you're good to go. You can do direct deposit. And I think for employees, direct deposit is very convenient, assuming that your employees have access to banking. A lot of Americans don't have convenient bank access, which is unfortunate, but it's a group of people that collectively is referred to as the underbanked community. And so people who just don't have access to banking services because of all kinds of scenarios, could be fraud that's happened to them, it could be identity theft, it could be geographic access. There's a lot of different reasons that somebody might not have access to a bank. And in Butte County, that's going to be an issue too. Not necessarily geographic as much, although there are some very rural areas of Butte County. But it could be due to just personal scenarios where they just don't have access to a bank. And so they need that check. They need to go to a check cashing place because that's the only way that they can get their money. It can be kind of a struggle. So physical check is fine. Direct deposit, I think, is great for the people that can get it. And so what I did is I won't say the name of the bank, but I used one of the major banks like that, of like a national level, one of the largest banks in the country for my business banking. And I just asked them, hey, I have employees, I need to do direct deposit. Can you help me set that up? And they just added it to my list of things that I get from that bank. And I think I paid a fee, but I think it was something like $3 a month. It was not a lot. And then they had a service. I just go on their website. I say, perfect, here's my list of employees. I would have their bank account and routing number in the bank system so that I could just check the box for that employee, say, here's how much I'm paying them. And then the employee, the one thing that you need to know if you're going to do direct deposit though, is you need to have a record of the whole same thing that you would have for a pay stub, right? Here's the number of hours you worked. Here's the amount that you get paid per hour. Here's your gross wage. Here's your net after taxes and Social Security, and maybe benefits come out if your employees get benefits. And you need to have all those records, even if you're doing direct deposit, because your employee is going to want those records for their own things. And so what I always did is I had in my office, I had a locking drawer where I kept track of all those records. And I told all my employees, here's the payday. Everyone's going to get paid direct deposit on this day. If you want your statement, come get it from me. I'll give it to you directly. No big deal. And then they don't always have to come pick up the statement the day they get paid. It doesn't matter. They can come to me 3 weeks later and come pick it up. I don't care, because it's in my filing cabinet, and I'll give them their statement anytime they want it. But I always kept track of that just to be sure, because if they ever had a question where the employee said, hey, I got paid a lot less or maybe a lot more than I expected to get paid, what was the math there? Can we just double check it real quick? And it's very possible that I made an error. And if I did, then we have to sort that out. But sometimes they may have made an error. They thought, oh yeah, I forgot I did work on that day, or I didn't work on that day, or whatever. So that's one thing. So the last piece on here that I think is important to include is data security. And if you're going to keep track of your employees' banking information, because you're doing direct deposit, and you have their social security number, you have these W-4s, you have all this stuff, it's super convenient to scan all that, put it on some online file service, and then keep it all in like Dropbox or Box or I mean, if you're using Google Sheets like I have on here, it's really easy to keep everything in your Google files. And that opens up a lot of risk for somebody being able to either, like hackers accessing your information or something like that. And so I always used encryption services. And so I had a paid encryption service. I used Dropbox for all my files. And then I'm going to name a program, but I'm not plugging them. I'm not suggesting that you use them. I'm just saying it's the service that I used and it worked okay for me, was a program called Boxcryptor. And Boxcryptor encrypts Dropbox. And so that whenever I want to log into Dropbox, I have to decrypt it all, use that information, and then it re-encrypts, so that if anyone were able to get into my Dropbox for somehow, like, using my password, then they would all be encrypted anyway, unless they had access to my Boxcryptor file, which allowed the decryption access there. And so I did that as not just a service to my employees to make sure that their information was secure, but to my clients as well, all of my client information, right? I was a financial planner, so I had clients that had, I had a lot of their personal information, credit reports and all kinds of stuff that, for whatever reason, if I had it on my hand, I wanted it to be encrypted. And so that's just another thing to include for your employees, for your clients, for your business. Everything should be encrypted. I had a very close friend of mine who has their own business where they did media work, and they did photography and videography and those kinds of things. And somebody had hacked into their I think it was a Google Drive file. I'm not 100% sure what kind of filing system they used, but hacked into their system where they kept all of their pictures and their videos and everything, and held it for ransom and changed their password so they couldn't get in. And they said, you have to send us such and such money or Bitcoin or whatever in order to get your files back. And luckily for my friend, he's like, well, I have extra copies of all of those things, and all you have are pictures, and they're not private information. They're not, personal data of any kind. So you can just keep them. I'm not paying your ransom. And I have all those files elsewhere. And so that worked out for him, luckily. But there's been big news over the last few years of hospitals having the same thing. Somebody hacks in, steals all the employee hospital records and holds them for ransom, right? And if it's not encrypted, they're going to have access to that. And even if they return it to you, even if you pay the ransom and get it returned, they may have copied it all if it wasn't encrypted, right? And so now they can release that and sell it and do all kinds of other things. So I just highly recommend security, encryption software, one way or the other. You can figure out for yourself what system works based on how you operate your business, but I highly recommend that as well. So that's it for the managing payroll workshop. It's a little bit more complex, a little bit longer than some of the other ones, and so I apologize if this just seemed a little dense. But that's kind of the basics of a new employer just getting started on payroll. I highly recommend going to read the instructions for all of these forms: W-4, the I-9, the 941. Let me go all the way back up here. This is publication, it's called 15T, but if you just Google, income tax withholding for the IRS, you can get IRS forms directly from the website for free. You can see them all. But go through, read the instructions, understand how these work, and then you should be good to go. Create a profile on the EDD website if you have employees in California or you're an employer in California, and then you can go from there. So that's it. That's the presentation. Appreciate everybody watching. Let me know if you have any questions, and thank you.